Good afternoon, everyone. Today's September 30th, Friday. I'm doing the 5-minute video on Friday to get a head start on this weekend. Let's get started here with the ES, the E-mini S&P futures contracts. Last week, I highlighted the possibility of a wave 3 or phase 3 topping formation that may end up stalling. And what that basically boils down to is a excess phase peak pattern that starts out with a rally to the upside, a rollover into an apex formation, which I believe is this formation here, and then a rollover back down to establish potentially a double bottom, which I was expecting to happen across this level, or potentially down here near this level, which would be the pre-COVID highs, before finding some support. Now we're headed into Q4, and we're ending Q3 right now. We're going to get a slew of earnings coming out, and I believe earnings are going to be fairly strong, moderately strong. I mean, yes, they're going to possibly be lower than expected to some degree, but they're still going to be moderately strong overall, and earnings drive the market. So we really need to see how this plays out going forward a little bit, and something we also need to contend with is the potential that we have a continuing trend line from back here across these highs all the way up here across these levels. So understand, these are basically the bottom lows after 2010, and they could very well be projecting forward into a very strong support level for the markets going forward. Let me get rid of this and try to extend this forward so you can see it. So we're following this line across these highs that come right across the 2015-16 highs, right across these lows in 2018, across here. We broke through it, we stalled after COVID, and guess what? This level here could be acting as very strong support right now, right here, this green line, and we need to see how it plays out. That means we've got very strong support around 3440 in the S&P. Let's go ahead and take a look at the Nasdaq right here. Hold on. Try to keep this under 5 minutes. I spent a lot of time on the ES. The Nasdaq's doing the same thing. We've got the new low. We've got a lot of my drawing from the previous weeks here. We'll get rid of these. We still need to watch how it holds up in this area. Like I was telling you, we've got some very solid potential support in this area, but we're not quite there yet. We still have that same low pattern from way back here, and I'll draw that line again so you can see it right across these highs, comes right across these levels here, and comes right up into these areas right over here. So the Nasdaq has a bit further to go to the downside, potentially. And what we're seeing here is, if we look, and I drag this off, the Nasdaq back down here at 6,600 really is the ultimate support. And we have to watch this support level right now, right here, which is 10,893. Now remember, we're already positioned for this downside move. We're already hedged and protected against this move, and we are positioned for it. So let's take a look at Bitcoin real quick. Bitcoin's holding up and is trying to form a bottom, which is why I believe we may see that continued rally that I suggested off of this low. This was the low that I projected, and I expected it to come here and then potentially up to here. Bitcoin is holding up very well, and I think fear and a change in investor trends could prompt the U.S. market higher and Bitcoin higher throughout the end of the year and into early next year. Let's take a look at crude. Crude oil is moving downward. It stalled out. These are weekly charts. Stalled out down near the low levels that I expected. I mentioned that this level would actually attempt to hold as support. But eventually, I believe that the demand destruction is going to prompt it to move back down into the 61 to 64 level. So we need to see how this plays out. It is decidedly moving downward and has broken through this recent support level. So the next move will probably be somewhere between 61 and 64 by the end of the year, maybe a bit lower. Let's take a look at gold. A lot of people are asking about gold. And I believe gold is washing out. You can see this big rally here in gold that's taken place. You can see the support level that we talked about previously, the 1670 level. You can see that gold was up today, actually was down 0.3 cents today, very flat. But you can see this deep bottom, and you can actually see we've got kind of a 1, 2, 3, 4, 5 formation down here near an ultimate low. And again, it basically plays off of these lows back over here that we've seen over and over again, and then these COVID mid areas, which I believe is going to become a very important support level. So getting down to these lows is very, very important in my opinion. What we do from here is going to be very important. If we rally back up out of this, you can see I've done a lot of drawing in this area, but if we rally back up out of this, then we are going to see a potential very strong move to the upside for gold. We could see a very big upside potential because we have a formation that is trying to get rid of all these lines that I've drawn. We have a formation that's rather unique, and I'll explain it to you real quick right here. What we have is an extended excess phase peaking pattern. Come all the way up to this peak here. Then we move back down to here, flag out sideways across here, and then we get this breakdown here. It's attempting to move below this level, which this level right here is going to be our critical support level. It's attempting to move below that level, but if it can't move below that level, then we're going to see it attempt to move back to the upside. And that's what I believe is actually taking place here. It's kind of a false breakout type of pattern. And these happen perpetually. These patterns repeat over and over in uptrends and eventually before a major downtrend. If we do clearly move to the downside, then we're going to see a much broader downside move. But given what's going on in the market, given the fear out of Europe, the fear of what's potentially happening with the Fed, you know what? I'm really starting to think that we're looking more towards a breakout rally here, a shifting rally phase as fear escalates, than a deep, deep decline. We could see a deep, deep decline in metals, but a deep, deep decline is going to put it back down into this 1450, 1470 range. And I don't really expect that to happen with any vengeance. I don't think it's going to be a big blowout. It's going to depend on what the Fed does. If the Fed pivots, we might see a decrease in the US dollar, might see the gold actually start to move higher. Lastly, I'm a little over my 5 minutes. I'm sorry. Let's go to silver. Silver's doing the same thing. Silver has the same drawings that I put out here last week. Try to get rid of them. Okay, bang, 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 bang. Boy, I did a lot of drawing last week for you. All right, so the same type of setup's already setting up. We've got the rally phase here, the COVID phase, and this is, again, you can kind of see this move, this peak formation, then we get our little flagging formation here, then we come down, set up a low, comes back up, get our flagging formation, breaks through it, sets up a low, comes back up to our high, comes back down, sets up a flagging formation, has already broken down into this level, has already come back down to the pre-COVID lows. This is where I believe we're starting to set up a very solid bottom in silver, which is why I believe we're going to see the next move higher. So you can see the, let me do this, and we've already got it. The Fibonacci here is already telling us we've come well below the 618 retracement. We're way back down here into possibly a 75, maybe 82% retracement. We're back down to these COVID lows. This washout back down to these COVID lows is critically important, in my opinion, and I believe we're going to be looking at a nice solid rally phase back into this area and then possibly a breakout. And I think that's going to be essentially a 1, 2, 3, 4, 5 type of breakout. It may take until these time frames over here, 2023, so that would be August to November 2023 for this breakout rep to really happen. But I think we've reached our low, and now we're going to start moving up, form some sort of a top over here, come back down, and then eventually break out. All right, guys, that's it for now. Follow my research, pay attention to the longer patterns, and watch what the central banks and currencies are doing. It's very important.